What is up, everybody? Welcome back to the 21st Century Renaissance, and welcome back to another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano, and none other, the only one I know of. There are some other LoPiano doctors, but only one of me so far as last time I checked. Actually, there might be another one. I don't know, man. Anyway, welcome to our show. Great to see you all once again. Yeah, we got an exciting day, I think, coming up here on GameStop based on what I'm seeing, right? You know, I don't get too excited very often. I try not to. I try not to get too much euphoria out there. But I will say, based on what I'm seeing in our gamma data, based on what we saw yesterday, I'm feeling pretty good. I'm liking what we're seeing here, right? Insofar as, right, you guys know my goals, right? I don't give trade advice necessarily. I don't give investment advice. I'm not here to exhort you to trade or invest in GameStop, but I have a lot of epistemic goals with what I try to do. That is, I try to understand better what is really going on behind the scenes with the market. And, you know, I get kind of excited when I see things, when I learn things, when I use new indicators, when I use new methodologies, and things start to play out the way that I expect them to, with a greater degree of accuracy and or precision. So we did get some of that, thanks to, of course, huge community efforts, right? So much of what I've done, I mean, you know, everything that I learned is something I've learned from somebody else. You know, really, really big shout out to definitely to Ultimator 5 for what he's been able to do with tracking swap activities. We're going to break down some of the stuff that I did have a chance to look at and see play out live yesterday. So we're going to talk about that a little bit, maybe how you can use that as well to, you know, meet some of your epistemic goals, if you feel so inclined to call them as such. We'll look at that, and then of course, yeah, we're gonna go through my usual analytics here, both in terms of technicals and you know, what I'm seeing in our options data and how that kind of aligns historically with some scenarios that you know, we saw actually play out way back in September. So we're going to take a look through some of that and see what we can see. For those of you who may perhaps be new to the channel, every day I publish analytics on GameStop through technical options methodologies. Both technical analysis and options analytic methodologies, I should say that, right? I especially look very closely at market maker gamma exposure, try to understand how that governs the price and affects where we go on a regular basis, as well as looking at kind of key levels from the broader market and on GameStop specifically. So that's my basic kind of analytic approach. And then I also attempt to bring in some other methodologies that I may or may not find to be complementary with some of the things that I take a look at on a regular basis, experiment with some of that. We also break some of that down on our live streams here. Definitely go check out some of our past live streams if you haven't yet had the opportunity to do so. But of course, every day I do package these over on X. I publish these as X articles. You can find them if you're watching this on YouTube. They are linked down in the description of this video. If you are, of course, watching this somewhere else, then go ahead and take a look at my X page. That's where you're going to find detailed breakdown here. And that's what we're going to walk through right now. Before we get into that walkthrough, I do want to take some time to thank our sponsors, right? Everything that I do here, everything is completely open access. That's how it started. Never put anything behind a paywall. Everything, like, there's no premium. There's no, you know, a certain set of people get stuff because they gave me money. Nope. Everything that I do, completely open access, completely public, available for you, right? So everyone who has generously agreed to sponsor some of my content has done so purely as an expression of gratitude. And that's the way I like to keep it. So let me go ahead and take some time to express some gratitude back for sponsor for today's newsletter and video breakdown is Puma the Dog 21, user over on X. Thank you very much for my coffee today and for sponsoring today's breakdown and newsletter. And of course, thank you very much as well to Dad Scruffy, thank you very much, and to Ken Wedmerland, who have pledged on a regular basis to help offset some of my data subscription expenses that I pick up on in order to produce this content. So thank you, of course, to everyone who has contributed and supported in the past and who will contribute and who has yet to who has already, right. I always have a backlog of people who have been generous to go ahead and make donations per letter. So looking forward to being able to thank everyone in due time. Lots of interesting stuff starting to come down the chain here as we get into this, right? Pretty cool posts here. If you have a chance on Reddit, go check this out. Solar Moonshot posted this, right? Looking at, right, what he says is the only recurrence of a particular song theme in anything that Roaring Kitty has posted. And the I Will Wait For You song, he particularly looked at, was posted by Roaring Kitty back in 12/14, or excuse me, yes, the 14th of December 2020, that had to do with swaps on GameStop. And of course, the only time we've ever seen Roaring Kitty re-reference this was back during his Futurama tweet on the 22nd of January, in which that song played in the background to Seymour Butts, Waiting for Fry. So what this user seems to think is that this is a reference to the March 2021 4-year swaps that were entered back when, and that they would come due sometime around March earnings of this year, between March OPEX and March earnings, which I will point out does line up with one of Richard Newton's swap dates. So Richard Newton has around March 28th, last time I checked, as a potential upcoming swap date. Of course, now that we have some eyes on this, indicators from the Ultimator 5, it'll be interesting to see if we can see through his indicators that detect swap activity, what kind of pops up on our visuals there. But you'll remember, of course, way back in December, I took a look at a Ryan Cohen tweet. Actually, I'm going to scroll down to the bottom of the page for a second here, as I put this here as my kind of cyclical recurrent theme here. And that is Ryan Cohen's tweet from December 30th, where he specifically was looking for software engineers in Dallas who specialized, right, in full stack React. Right, React with 10 plus years experience. Okay. What's very interesting to me is that, well, on the one hand, right, I mean, I noticed this because I had this is a cosmetic thing, right? I do not think, to be clear, I do not think Ryan Cohen was talking to me. But I noticed this, right? I have this like 10 plus years studying the Renaissance thing in my bio. So I was like, oh, that's cool. Like, I wonder what's going on there, right? Full stack React. Oh yeah, like React. I wonder what that is. And I happen to notice this. A couple other Reddit users, I think, noticed this back at the time too. This is a meme, right? That software, right? Whenever people are looking for software engineers to come in with, be senior engineer or something like that, they always, list experiences, experience requirements that are impossible, even if you're the person who designed the system. Like, a lot of these systems are so new. And that was actually the case for React back at the end of December, right? And I ended up looking this out, and React didn't even come out until March 25th. It didn't come out until March 25th, 2015. So it would be impossible to have a software engineer with 10 plus years experience in full stack React, unless that person was hired on the 26th of March, which would be right one day after what is projected for earnings now. Earnings now are projected for the 25th. They may take place on the 26th, but that'll be when that person, right? No one exists in the world to fill that position, as it is described by Ryan Cohen here until after earnings. So this kind of aligns with this idea of, okay, we have a pretty big swap roll date around then. I think right around this time too, Larry Chang was talking about basically, right, not talking about GameStop, but perhaps indeed talking about GameStop. That kind of the last hurdle for a company in transition like GameStop is to be able to show revenue growth. That's kind of the last piece of the puzzle here. And if that's going to take place, then the place to see that featured would be earnings. So looking at basically this earnings kind of end of March as a key time. Not sure exactly what that's going to look like at this point, this far out. We can maybe spend some time thinking about that during this weekend's live stream. But in any case, right, I want to point this out because this is, as we're thinking about kind of these cyclical periods or how we kind of transition between modes, this should be, at least as I'm thinking about this, I'm thinking kind of out to this date. And I'm thinking out to what contextual factors we might see leading up to that date and what that means for our price action now. So, as I say at the end of my write-up today, I'm not getting too ahead of myself. But there are some reasons to, in the short term, maybe have a bit more of a bullish or a continued bullish outlook. So I thought I'd bring that to your attention here. Again, we can break some more of this down during the live stream this weekend. Market context. Yeah, yesterday, little dip-de-doo, little spooky because we crossed the gamma flip line there in the 608, 609 realm and moved into some slightly negative gamma territory, right, which can make things a little bit slippery. We got a little hockey puck action down here, a little bit, but we did not cross the volatility trigger at 605. This is key. So when we get those volatility trigger crosses, that's where we really get that vortex sucked down as market maker hedging kind of builds on itself. So as kind of options traders come in and they sell, or they're shorting and the market moves down, or there's major selling, as it moves through these deeper, more densely packed trader long put gamma accumulation spots, right? Because traders are long puts, they have negative delta on their books. That means that market makers, dealers are short puts, short the puts that they've sold to traders, which means they have positive delta and positive gamma on their books. And we look at that on a gamma chart, especially with SPY, right? We can assume when we see put gamma dominant positions that traders are net long at those positions and dealers are net short at those positions because they have positive delta on their books. As the price goes up, their delta and gamma values will go up with it, right? So as delta and gamma appreciate, they're going to buy shares, they're going to sell shares in order to cover those positions. So if we're thinking about puts, right, as the price goes down, the negative delta on traders' books is going to go up, which means the positive delta on dealers' books is also going to go up. And to remain gamma and delta neutral, they're going to sell shares in order to remain neutral. So when we see the price move down, right, gamma is going to spike into that. It's going to spike negative. Delta is going to spike negative as we move down. IV is going to go up, which is going to cause those to appreciate even more. You're going to have the Vanna component appreciate delta even more. And so all of these factors are going to combine over on SPY, mind you, with market makers selling shares into the price dip. So it's going to cause this kind of snowball effect as we move down. That's why the volatility trigger can be a bit scary. But we didn't cross it here. Just kind of going into that slightly negative area, make things a little slippery, but not really doesn't send us down, into the gutter like we've seen happen a couple times, like with the DeepSeek thing or the tariffs or whatever that was. So yeah, a little bit of that, but then we came back up, and now we're again back towards all-time highs again, pre-market. This may have kept GameStop's price lower earlier in the day, but it doesn't look like we had very much beta kind of with the situation at all, in particular. And that may have something to do with swaps, so we'll elaborate on that in a second. So basically what we're looking at heading into today, same stuff, key levels, call wall 615, gamma flip line 609, volatility trigger 605. While we're above the volatility trigger, while we're certainly above the gamma flip line in this call gamma positive territory, we're looking at kind of this slow upward grindy action up towards the call wall, kind of some scrubbing in there. It's kind of stable, not too big moves. Basically that, unless we get some kind of catalyst that kind of knocks us out of this range. But as long as we're staying above 605, we should continue to see recovery into this call gamma stable area. If we go across that line, maybe not so much. But if we look at what our gamma accumulation looks like, basically at our upcoming daily and weekly strikes, we still see optimism out into the end of February. The very last day of February has a bit more put gamma accumulated there. So that might be traders being a little bit concerned about the possibility that this bearish buildup here for early March, concern about that might kind of kick off early, that the bigger players might go, okay, we see this stuff coming up in mid-March. We're just going to flip the switch. Things are going to start tanking, next Friday or something like that. Now, definitely not looking that way. We are super call gamma positive. We are heading into early next week. Looks like Tuesday and Thursday are a bit more neutral right now, but we'll see how that develops. But basically early next week, still looking strong. Friday, maybe we start to trade down. The strikes basically in our first week of March are looking okay. They have softened a bit. They are kind of neutral. This looks indecisive to me. But as we move into our weekly expiries, so the 7th, the 14th, we head into March OPEX. Obviously, March OPEX has some pessimism in there. Important to keep that in mind, as I will remind us at the end of this breakdown, and then as you'll see if you go ahead and read through my newsletter. Yeah, keep this in mind. This exact situation happened right last year. If we actually bounce over, I'll bounce us over to our charts. Like, why not? We like charts here. Videos, charts make a better thumbnail anyway, right? We love our charts. Yeah, let's pop out. Let's pop out to our yearly here. We should be able to see it. So, I'm gonna have to do this a little differently. Show you what I mean. So if I do a little screen share here, that's a little dance here. That's bonus for this video. Yeah, so you should see this. It was this little thing here, right? This little cauldron, right? We went into, it's a little later actually. March OPEX, we still kind of bowled through March OPEX. I guess April was more of the bearish month. But toward the end of March, right after March OPEX, we just kind of tanked into April OPEX. That was no bueno. And then we hit the 100-day moving average, kind of indecisive there, hung out a little bit, and then came out of that into May. Now you'll recall, if we hop on over to GameStop land, what did we see? Oh, we had that big cauldron there, right? Coming out of, again, going into, then we kind of recovered we peaked early March, traded down into earnings, then the last couple days before earnings, or I should say, traded down through March OPEX. Then once March OPEX was off the table, we made sure those, some of those pesky calls, especially those 15s, were out of the money. And then on the other side of March OPEX, we had a nice quick little spike. Earnings was surprisingly good, so naturally GameStop sold off super hard down to sub $10. And of course, all of this occurred amid this downturn in the overall market. But of course, as soon as we cleared April OPEX and all of those options expired out of the money, we get the magic recall and the run to $80 pre-market, right? So that was fun. Everybody remember that? I remember that. That was fun. That was a little cool thing after being a bit bored with other things in my life, to just see that and go, oh, not bad. Enough about me, though. Let's get back to our regularly scheduled GameStop programming. I'm having a bit of a silly day. You guys ever have silly days? You can't answer that because this one is not a live stream. But if it were, you could answer it. You can. In a few hours, we're going to do a live stream, so you can answer that question then if you feel like it. Yeah. So what did this mean? So, or again, anyway, looking a little right, trying to prepare for March, not getting overly enthusiastic about March. That's what I was saying before I talk silly. And then, yeah, so not getting over enthusiastic about March, but as we hop into what occurred yesterday, price movement recap, well, we got that up move we were looking for, right? We got some of these gamma dynamics playing off. We got the move to 27. It was a low volume one, right? This was the low volume scenario I talked about. Looks like the second kind of push up on this was driven by options activity. So this here, the stall, the bump off the 50-minute moving average, and then up to the 27.45 level, which is just above where the resistance line of our bearish regression macro channel is. It was also within a few cents of where the 50-week, or excuse me, the 200-week moving average was, which looks like maybe it served as a lid there, and then we slipped back down and stuck towards the upper part of this channel. Yeah, we weren't even really trading in the VWAP bands. We were really using like our regression channel lines there in order to kind of plot day trades. At least traders were. So 27 and then or kind of 26.90. We were kind of doing that, and then a little bit above 27, and then we closed at 27.04. So, but this move here, this one, this looks like it had something, at least as far as Ultimator 5 is concerned, with swap activity. So as I mentioned yesterday, I was going to be paying especially close attention to some of Ultimator 5's new indicators, specifically because yesterday, looking at the 1-hour chart, I was peeking at the 1-hour chart, we got a super strong signal from one of Ultimator's new indicators. Very strong. I had pointed out that it had predicted to within a couple days, to within 1 day, this last move that we got, I think on Thursday last week, and to within 2 days, the move that we got on Monday. So this bottom finder and this kind of swap activity detector was basically able to pinpoint more or less a pretty flat area that then resulted in a pretty dynamic up move shortly after. So basically what I was looking for was, okay, this was a very strong signal. If this works, then tomorrow we should be able to see some kind of up move. And I had suggested that would be the case, that if we got a low volume up move, it would head up to about 27. That I considered this touching of the 2570 technical level to be a pretty decent sign that could occur. I did say that based on our technicals and short liquidity data, it did look like we could trade down to 25 if there was some impetus to do so, but that there wasn't really that much downside. Really, 25 was as low as it looked like we would go. But what's really cool to note here is that, it looks like Ultimator's new indicators are going to be a really excellent additional data point, an additional way to say, okay, right, because technicals, not perfect. Options only kind of tells us about structure, right? We had the structure for this type of move over in our options data. We still do today, which I'll get to in a second. But a lot of this tells me about potentials, and then I still have to kind of gauge the probabilities myself, right? I can't, be that precise, but I can say, okay, this is what this looks like to me. Pretty good conviction, but still, right, some kind of muddled signals. Not exactly sure if it's going to light off today, maybe Friday, maybe Monday, right? But if we throw in these indicators, these new indicators from Ultimator, this adds yet another dimension. Because Ultimator, it's closed source. This stuff is closed source, but Ultimator is attempting to tune this stuff to information about swap activity, which is not something I look at. I think I've talked about this on several live streams. That's kind of the key. That's not my particular strong suit. That's not what I look at on a regular basis. I do not base my trading off of that, although I think there are a lot of people who do, and I think Roaring Kitty potentially does to a certain extent, maybe even Ryan Cohen. So if this continues to play out, obviously, right, this is not trade advice either. Ultimator, of course, says that none of his indicators are meant to guide trading or trade advice or investment advice or anything like that. So please exercise caution. But very interesting to see, again, from an epistemic perspective, what this might mean as far as our ability to forecast kind of price action like this. So that was very interesting to see play out. Yeah, options were decidedly bullish. Short liquidity didn't really move. We did the kind of overnight shuffle, but beyond that, nothing really notable intraday. Over on our technicals, if we, again, taking this kind of classical technical perspective, what I think, right, we're looking at here, right, we have a very similar kind of patterning that we see playing out, or that we saw playing out basically after this attempt to enter a short cycle prior to the December 5th, December 10th Wombo combo, right? So Wombo combo speculated from one of Roaring Kitty's videos back in 2021. That's kind of a 1-2 punch from Roaring Kitty and Ryan Cohen, right? Roaring Kitty on December 5th. Ryan Cohen delivering on that awesome earnings report and then not doing an at-the-market offering. Wombo combo, this attempt to walk the price down, which happened in 2 phases here, right here on January 13th, 14th, and here again, just about 2-ish weeks ago, 3 weeks ago, I guess this is. 3, yeah, right at the end of January. So this is about a 2-week period, right? January OPEX. Yeah, that 2 weeks after January OPEX, around like the 31st, I think this was. Right, so we get this kind of, that's when this stuff occurred. We get this 1, 2, 3, and then of course we enter into this following Jimmy Carter's National Day of Mourning. As I'm looking at stuff here, it does look like we could, right, we move into this kind of zone, this zone bracketed by 31 and kind of 29. These are kind of local highs. So 29, that 28.90, 29 area has like low 29s, has proven to be a hang-up point, a resistance point on a lot of our local kind of run-ups over the past couple, over the past about 6 weeks. So that 29 area is pretty resistant. It is just south of the $30 call wall. We have some moving averages that we're hanging out up there as resistance levels. So that's kind of our first barrier. I think the true first barrier on a move up is something like 28. If we get a kind of bullish low volume thing today, I think we could see a push up to 28. There are a lot of calls at 28. I don't think market makers will want to have those calls close in the money, or it's not in their interest to allow that to happen. A low volume day, I think, would result in a test of 28, but ultimately closing somewhere back around where we are, maybe even driving the 27s out of the money because there's a lot of OI at 27. A sort of mid-bullish scenario, I think, would take us up into that 29 area, so just where the bottom of this box is. But then after 29, like, stuff gets, wonky in this red box, and then we're kind of referencing this 31 or this 31.66 area as a resistance level, kind of 31.50, which line up, right? Which line up as we go to these peaks back at our bull run in late November and mid-December. RSI definitely has some room to run up here. Yeah, we look like maybe we'll get a third peak. So really what's displayed in this box, right, is this area. These about 3 weeks are kind of entering into heavy shorting. And what it looked like to me, market makers or institutions, bearish institutions, wanted to do was really push this down and kind of get chop and get churn and get the volatility going. But first, they wanted to profit off of basically what they did on January 14th. They wanted to do more deeply on November 29th into December 2nd. But Roaring Kitty's tweet and then a good earnings kind of spoiled that. And so this basically from up to earnings, then kind of after earnings, they weren't able to walk this down again. So if we look at this kind of sideways period here, that kind of matches up with what we're looking at around the sort of earnings. And then we got this kind of 3-peak formation, this bullish 3-peak formation as they closed FTDs, as they attempted to keep the price contained and attempted to create, prepare to create liquidity for themselves. So closed FTDs, liquidity got restricted, volatility was way up. They were able to sell options into this, and then somehow magically on January 14th, after the National Day of Mourning, just generate, basically between the 10th and the 14th, generate a ton of shares, generate some liquidity, and then pour it on to the stock, generate more liquidity into here, pour it on again. And then now what looks like is now we're looking at this same kind of formation, this close these FTDs, right? Close these FTDs, roll swaps, right? So it seems like what Ultimator is suggesting is what Richard Newton has been suggesting as well, right? Swap rolling, right? This was to get the price down, to roll the swaps, Now the swaps are being rolled. Now FTDs are being closed, right? And it's causing this chop. It's causing this volatility, and it's causing this bullish pattern. So I wouldn't be surprised. At least what the technicals are suggesting is, we get one more kind of run, right? Maybe it doesn't go as high if it looks like this. Maybe it doesn't go as high as our second candle here, as our second kind of peak in this wave, this bullish regression subchannel here. We'll see how high it goes based on the volatility and our options, right? If we really get some churn in the options, we can really send this thing up there. This thing can really be sent up there. It's not like I'm there, pulling the strings on, options contracts, trying to make this thing go up, as though I actually had the money to do that. So yeah, that right. This looks like kind of a similar phasing in this to me. So yeah, and of course, how did we even enter into this in the first place? And right, what might this mean? A great post. If you have a chance to go check it out, go check out Raging Formal's post on cat errors over on he posted over on Superstonk. Apparently, January 13th, the day before we had this huge sell-off, was the largest number of equity errors across the overall market ever recorded for a single day. And I think ever recorded for 2 days in a row between the 14th as well. So as he's pointed out, that usually corresponds to major upward price action in 35 days after and the 70 days after for GameStop. Curiously, we have no FTD data for any of that period, but it's been redacted. It's been disguised. FOIA, Freedom of Information Act requests have been denied for these days, and yeah, but this might each time, right? Region Formal's been pretty good about tracking the cat errors. That each time these have occurred within 35 days, GameStop has an unusual increase in price. So we've seen a little bit of that already kind of play out. Maybe that's already occurred, but we might still have, given really how many equity errors there were back on the 13th and the 14th, we might still have a little bit more of that to go in our future. That's certainly what he seems to be suggesting here. And I just basically, that's what I outlined here in the article. If you want to see me break this down in a sort of even more systematic way, you can go check this out. But definitely go check out Region Formal's post as well. Options data, bullish heading into, skewed bullish heading into today's expiry, skewed a little bit bearish, right? So call trades at the ask, mostly heading into, well, a majority of call trades at significant OI expansion strikes occurred at the ask heading into today's expiry. A majority at the bid occurred heading into next week's expiry. So make of that what you will, right? What goes up must come down. Certainly, IV has kicked up a decent amount into the 80. So yesterday, I think it was up about 10 percentage points versus our lows last week. So decent IV appreciation. Max Payne still at 26.50 for this week. But of course, our crown jewel here is what I want to point out. Okay, this formation, this stands out to me, right? I've been talking about this a while. I've been talking about, our gamma data pointing to a gamma ramp, pointing to the potential for our options landscape, market maker hedging, to be exploited by a particular institution or some kind of event, if it's going to come in and happen, to really cause some kind of major upward volatility event if we get the right amount of buying pressure to cause it. So we started to play with these dynamics a little bit yesterday. That's where we just get those vertical, right, just at a right angle, and then the price just goes up. And the right amount of buying at the right rate can cause market maker hedging to buy a lot of shares very quickly in order to account for their share delivery obligations with an approaching OPEX, with an approaching options expiry. Now, what makes for a very powerful, a very potent, a very violent, a very volatile gamma ramp is when we have these huge accumulations of market maker gamma exposure, call gamma exposure, all stacked up on top of each other like this. This is very dense, right? So if it's just at one strike, not necessarily. But when you see it kind of dense but distributed across multiple strikes, that's where you get those opportunities for some big ups, as long as you get the catalyst for it. Now, what would this look like? What would this formation, what would this box of compact gamma exposure look like? Well, if we look way back to the 20th of September. So my pre-market analytics, the 20th of September, we saw something very similar going back to the 20th of September. And we saw a similar, very high concentration of call gamma exposure, around 3 back-to-back strikes, with our price basically hanging out at the bottom of that ramp, with, of course, some gamma up top here. And yeah, what happened was, right, well, this, right, started out pretty unassuming here. We traded up a little bit. We actually then sold down. We stayed flat basically for the first hour of the day. And then all of a sudden, something picked up. Somebody decided to go ahead and, I don't know, kick this off. And then in the span of an hour, right, we just bumped up $2 pretty incredibly. We came back down, we sold back down, and then we re-upped. And then into the day, right, as new call gamma inserted itself up at these upper strikes, we went from like 21 back down to like 2050, then came all the way back up, touched 22, traded down into the after hours. But basically all of those high call gamma strikes all closed in the money, right? So max pain was like way down at 20. And there were tens of thousands of options contracts, tens of thousands of calls that all closed in the money. So the market maker then had to go ahead and deliver on those shares. It's possible that in order to, and this is what I said way back in September was, well, okay, why did it stop at 20 and then kind of reverse just, minutes before close? What I suspected is that probably the market maker stopped hedging, because it got into this situation where you get into what's called a gamma squeeze, is where the gamma ramp goes off. And as the gamma ramp goes off, it causes options buyers to chase that gamma ramp event by buying more calls. And as they buy more calls, they put more delta on the market maker's books, which needs to be hedged. So then that pushes the price up more. And then it sends pre-existing contracts deeper into the money, meaning or into the money in the first place, which sends the gamma values up, which means they have to hedge more shares, which encourages more call buying, which encourages this kind of feedback loop. Now, what it looked like to me back on the 20th is that in order to prevent the 22s, because then there ended up before the end of the day a lot of calls at 22, the market maker basically stopped hedging just before the end of the day, in order to kind of push the price down, to stop that ramp from continuing, because there was no reason for it not to keep going. Call volume was kind of still there, and then it just all of a sudden started to fall off just below 22 to close out the day. But then what we saw, it got dropped down in the after hours, and then coming into Monday, it looked like we got some T+1. So then, to prevent all of these 22s from going into the money, a lot of shares that were due for these calls were bought here and caused this event to happen. And this event to happen, right? And then once those were delivered, those could be delivered. Then, although we still traded up into the rest of the day, probably just off of, again, more euphoria, hedging, and then, we waited for things to settle down. The market maker could then, kind of shift their positions upward by, traders come in, they start getting excited, they buy a lot at 25, they're buying all at 30, and then it's okay, they're not in danger zone anymore. The momentum runs out, and then it can sell off for a couple weeks, and then they make a ton of money on all the options contracts they sold during this week while the price was up and IV was high, and then they just pocket it, which they did, right? Which they did for all of October. My point of this, right? My point of explaining how this works is this happened like this on the 20th. We had, it was like 62 million shares were traded this day. So some things are happening here, but right, we have that same setup. So if we have a continuation of maybe, some kind of echo from this swap activity that it seems altimeters indicators are pointing to, if we have an echo of that, it could do that again. We're set up for that. We're set up for that in the options market. And then, of course, but to see it kind of get up here, it could. We have a lot of contracts up there too, right? If our price is down here, these are not showing us very high. But as we move up here, if we're at 28.50, gamma is going to be pretty high. Gamma exposure is going to be pretty high at 29. So we could get up in there. 29.50 is kind of weak. So I still think, right, I think most likely this is where stuff would peter out around the 29.50 area. And certainly market maker is not going to want 30s in the money. Market maker is not really going to want those 28s in the money. But if it really blows and we get this huge kind of momentum pushing us up and causing market maker hedging to keep sending the price up with it, then then I don't think there's a whole lot they can do about that with those 28s, huh? But we'll see. We'll see. Again, right, I'm not saying this is a foregone conclusion. I think the setup's there, which, based on what we've seen, it's a pretty good chance for it. It could be, I'll throw this out there, right? What happened on the 20th took a lot of people by surprise. We stayed artificially low on the 19th, and I wrote about that too, right? It was artificially low, and then we just had this whole gasket blow off. Yesterday, we had a bit of a bullish day. Maybe, right? Because this is something that's a bit more expected. I don't know. I don't know how to gauge general expectation. But maybe there's too much excitement. Not sure. But maybe they kind of just walk us down into this kind of 26.50, maybe startup here, walk us down a bit. Not sure. I'm not going to speculate. I'm not going to speculate on this. I'll simply say the structure is there. There is a chance for somebody to come in and really blow this up. I think if there isn't some kind of external catalyst and market makers wanted to make sure that somebody didn't come in and kind of force the situation to develop, they would just kind of let the price kind of slowly walk up into this area so we could get kind of trapped in here. But we just have to see, right? We just have to see how that plays out. It's going to be an exciting day. We're going to have a lot to talk about regardless on this weekend's live stream. Do go ahead, have a look at at my fuller breakdown here. There's also some humor. I put in some jokes. I was having a funny day. It's a good day. Yeah, anyway, look forward to seeing you guys at our live stream. At 8:30 Eastern time. Yes, 8:30 p.m. Eastern time. After market close. So look forward to seeing you guys then. And we'll have a lot to talk about. Come with questions. Thank you so much as always for all your questions. Love hearing from you guys on X. Love seeing your comments here on YouTube. So hey, fingers I'd say fingers crossed, but all our goals are epistemic, so we just have to see what happens. Anyway, all right, I should get off the video today. Should go look at the charts. It's chart time. All right. Bye, everyone. See you at our live stream after market close.